Hello there, everyone. I hope everybody is doing well. I'm going to change my microphone, so hopefully it sounds a little bit better. I didn't realize yesterday that it changed my mic details, so I'm hoping the audio is a lot better going into today's. Hi, guys. Right. Hi, Pops. Hi, Denise. Hi, Guy. Hope you're all well. Right, we're just going to try and just watch the reaction of the NFP today. We've got jobs coming up and forecasts. Let me just grab all the info. Yeah, so average hourly earnings meant to come in at 0.3%. Non-farm employment change around about the 180s, 190s is what's being forecast. And unemployment rate to jump from 3.5% to 3.6%. So we'll see how that job data comes out. Probably going to stick on the euro dollar price. Let me know what you guys are trading. Hi, Justin. Thank you. Hopefully we'll bring you loads more live streams. Going to try and cover more news events live, just get kind of a live reaction to them. Nothing too in depth so far, but it's going to be an interesting day. Yesterday, obviously, if you joined me for the webinars, yesterday we did a gold market mastery, and we were talking about this area here as a potential resistance point for gold. Let me just get a pen tool up, actually. That would help. So you've got some people trading gold, cool, some people trading cable. Right then. See if the pen tool highlights. Cool. Right, here we go. Yeah, so we were talking about this area on gold yesterday, and we were talking about the potential reaction from NFP or potential reaction from the dollar index being at that level. Could see gold prices drop towards this little minor range if price holds at that 101 level. If price breaks through that 101 level, gold could trade a little bit to the upside here. So it's going to be a little bit interesting. What I might do actually, I might close some of these windows down. I might split the screen over a few different Forex pairs. Give me a second. Let's just, do we leave the stocks on there? We'll get rid of Aussie US dollar. We'll get rid of silver. Got euro there. Got the S&P 500. US dollar index. I might four screen this up. Let me know if that's a little bit too much. I might then. So just to see the reaction, we've got dollar index in the top left. I might change euro up for cable. Or I might leave it. I might leave it like that. We'll go the 4-hour time frame on euro dollar. Keep gold there as well, because obviously we did the Forex market mastery on gold yesterday. So we're looking at this kind of tight trading range here on gold, and I'll leave the S&P 500 up because the S&P 500 quite interesting at the moment. S&P usually goes through a bit of a bearish phase, but it might not turn just yet. But we'll see how price reacts. We're around these kind of highs here down at the 41.80s. So it'd be interesting to see if price can trade lower, come down to the 38.70s, even sort of to those lows, depending on sort of the outcome of what's going on today. I might even take that to sort of the hourly just to see if we get some kind of big reaction. Let's go to the hourly on most of these. Let me know what you guys think. What do you think the NFP is going to do today? So we've got Cody trading gold, Justin trading the pound, Denise, euro CAD short off the potential double top on the daily. Nice. Vincent, I enjoyed all of yesterday's stream. Thank you. You're welcome, Vincent. Thank you for joining me again today. And codes on dollar yen as well. Okay, cool. So we've got a few different pairs on the go here, going into the jobs report. So it's going to be an interesting one to watch. Do we think it's going to come down, though? This is what we're going to be expecting. So I'm just watching Bloomberg as well. 185, their estimates are unemployment up to 3.6%. Average hourly earnings, 0.3% is what we're expecting. Yeah, nice one, Roberto. Waiting for data, then reaction before trading. Absolutely. NFP is one of those for retail traders where we can easily get sucked into trying to trade the move, but usually it's not the best thing to do. What you should wait for is the reaction to happen. If the reaction's in line with your bias already, then great. If it's not, then you should look to probably exit your positions and look for something else, or just walk away from the charts, because the NFP can really suck a lot of retail traders in. And I want to show you that, whatever you do here, it may not be the right decision. A lot of retail traders will be looking to straddle the hourly chart here. What I mean by that is, if you look at sort of, let's say, euro dollar up here at the moment, a lot of retail will probably be on the 15-minute here, probably looking to set some sell stops here. Buy stops maybe above that high, and they'll be straddling either side, waiting to be triggered in. The only problem with that is if you get caught on the side of volatility and price rallies first, takes you in that side, and then you're in two positions going in the opposite direction. So you can really be caught in that situation. I remember when I first started trading, I had a position on, I did the same on dollar yen, where the all week, the Bloomberg and other media outlets were talking up the fact that it was going to be the biggest jobs increase that we were ever going to see in the US in like 10 years. So I was waiting there with my buy stop order on dollar yen. Market was ranging beforehand, so I had the buy stop order in, and then it turned out to be the worst jobs numbers in 10 years. I got spiked in and price just basically shot to the downside. So I want you to avoid that going into today. I don't want to see anybody telling me that they're doing any straddle trades. We're just going to watch the reaction, see what comes out of it. Is it in line with expectations? Ultimately, the Federal Reserve want to see the labour market tightening, right? So they want to see some lower jobs numbers. They don't want jobs to be increasing, because the labour market can put pressure on inflation. So, what's the whole point of the market at the moment? They want to bring that inflation down. So if the jobs numbers start beating those estimates and we start to see increases in the labour market, that could put further pressures on inflation. That could then put further pressure on the Fed to hike rates further than this 5.25% than they've gone. So, we have to bear in mind that is what we're looking at today. I'm not looking to take any positions in this. We're just looking to see how the market will be affected by it, and what will it tell us going into next week's trading. It's all about that calm trading and higher time frame decisions. Okay, so we've got a few sort of seconds to go here. Let's see, we've got about 10 seconds before the announcement. Bloomberg's on a bit of a break here. Let me just split screen up at the top, so I've got a bit of both going on, and we'll see how the market reacts. Got caught on slippage once before I first started trading. Yeah. Okay, so we've had the numbers. Let me just refresh my page. Wow, big number. Okay, so this is probably the opposite of what the Fed want to see. So big numbers coming out of Canada as well. 253 is the number. So when we were talking about this 101 hold in here, this resistance on gold potentially for a move down, this is the opposite of what the Federal Reserve will really want to see. Average hourly earnings up to 0.5%. So it's a green board here. This could be a very bullish dollar move right now. Very bullish dollar. This is going to put a lot of pressure on the Fed now. 0.5% average hourly earnings, up from 0.3%. Jobs number, I've got 253 in above the 181. Unemployment rate down to 3.4%. So big numbers. S&P, I would have S&P would maybe, I thought would have jumped a little bit more on this news. Here we go. Let me go to a lower time frame. We'll see how the S&P is reacting to this. Okay, so we got that, definitely got that dollar strength. S&P could suffer on this because this could lead to the Federal Reserve having to hike rates more aggressively. This is the exact opposite of what they want to see at the moment. Just looking to see what the bond yields are doing as well. Very strong manufacturing jobs reported from Bloomberg. Manufacturing not in a bad place as expected. Average hourly earnings up. Yeah, bond yields have just shot right up. Wow, big move. Yeah, was not expecting those hot numbers. And this is, again, it brings me back to my sort of discussion just before we were talking about, this is where the retail trap is, because retail would have looked at those forecasted numbers and probably looked to have traded the opposite side of this move. So this is going to be quite an interesting one. I want to see if this continues, this dollar pressure continues, because the way we're looking at this now is we're respecting the bottom of this range. That could be quite a bullish positive move for the dollar. So price could come up into this 102 handle here. Okay. That would lead gold to back down into this sort of 1978 area here. S&P will probably continue lower. Euro dollar, we've got this area down through here. Could be a potential, but we'll see if the market really does take this into consideration. You can see the dollar index at the moment. We've come up into the 101 spot 50s, starting to just hold there. I want to see price try and push back through that level, head a little bit higher into those 102s. Yeah, wasn't expecting those numbers yet. DX seasonally going long for a few weeks. Yeah, absolutely. Seasonally, the dollar can be strong. Cody, just on a comment on the dollar, on your dollar index analysis, hitting 99. I remember when we were waiting for this euro to hit parity. Since then, euro has only strengthened. Yeah, that's an absolute fair comment. Yeah, it could absolutely not break through the 101. That's why I said this is a very important level. We'll see if price can trade. And that's the beauty of being a trader that waits for your technicals to play out. Okay, sometimes you may miss the first sort of initial move. However, I'm always waiting for that confirmation first, waiting for the market to tell me that my bias is right, because you have to be very flexible when you're looking to be a trader in the markets. You have to be very, very flexible on your mindset. If you're wrong, you've got to know that you're wrong very quickly. And if you're right, you got to double down on when you're right. Okay. That's a fair comment there. I think US CPI will come in hot next week. Oil has been driving up in April. Yeah, absolutely, Denise. I think you got a good point there. Be interesting to see, when is US CPI? So that's Wednesday next week, isn't it? It's already forecast to come in a little bit hotter as well, 0.4%. I think that's why the Federal Reserve have gone with the 25 basis points hike recently, because I think they're a little bit fearful of what inflation's going to do. I do feel like they are ready to go further with rates if needs be. CPI year on year still forecast to be in at 5%, but yeah, we'll see where that plays out next week on Wednesday. It's fairly light week for news next week. Apart from, we do have the Bank of England rate decision as well, and we got core PPI as well. I would have loved to have covered those, but I'm actually on holiday next week, so I won't be covering those. I'll be covering some stuff the week after that. I'll be covering them on sort of normal videos though, so don't think you'll miss out. Make sure that you are subscribed. But what big numbers. We actually had the revision as well, guys. So they've revised the previous number down from 236k to 165k. I love those revised numbers. Try and see if I can pull up the graph here for. Yeah, so we've just the past sort of few months, numbers have just been on the rise in the labour market, which is not going to be a good thing for the Fed. Right then, I think this is going to lead to a bit more dollar strength. The euro dollar starting to push down. We're at the 10.980s at the moment. Probably going to head down towards this low here. Around about the 1.0943s. Expecting a little bit more downside in the S&P in gold. Dollar index should continue to rally up towards this 102. That's just my personal opinion. S&P is quite interesting at the moment. If we go out to the daily time frame or the weekly time frame, for instance, we're in this sort of bearish trend essentially at the moment. Ever since the start of 2022, price has been fairly bearish. We haven't really recovered. There wasn't a moment down towards the 3,500 area where we did get that sort of recovery style move where price did try and make a break for the previous highs here back in August of 2022. But look at that sort of pattern that's developing there. It's almost like a consolidation pattern where we've got sort of, that sort of downward move. Prices making those higher lows, but higher highs are really sort of lacking here. There's no real momentum for buyers to trade above previous highs at the moment. So that does sort of suggest to me that we could see a continuation down. I've just realized you can't see what I'm drawing there, which is annoying. I thought you could see my pencil. How do I? Let me just see if I can share with you that pencil. No, it doesn't look like I can do it without turning the screen off. So you have to miss out on that. I'll try and talk about it the best I can using the crosshair. But essentially, this is the area I'm interested in. Can the S&P break above that? If it holds below this, there could be an opportunity for the S&P to trade back towards the 3,500 area. I mean, some analysts were talking about, well, one in particular was looking at this 2,200 level as a level that the S&P could reach if we were to fall into another recession. So two big areas to watch out for. But this could be a signal for the S&P 500 to start trading a little bit lower. If the Federal Reserve are going to have to get aggressive with rates again, then there could be a good opportunity for lower sort of stock markets, especially down into these areas first. Kind of that 3,800 area could be quite interesting. Let's just go to a daily time frame. Let's zoom out a little bit. Yeah, I quite like this area up here. Real big spike into this level previously. Lots of selling pressure. I like that resistance there. I like the support down through here as well. So it's going to be around about that 3,800 area, 3,850s. Yeah. Let's go take a look at our other moves then. So gold pushing to the downside here. That nice double top play actually came in quite nice. We talked about obviously gold in the market mastery yesterday, and I said the only way I'd be really interested in a short here is if we had that sort of potential breakdown with the double top pattern, and that looks like it's playing out here so far. So could be some potentials for gold to come back into this area here I keep saying that, and I'm not showing you the pencil. I'm on about this area here. We had the double top pattern there. A little pullback to 2034 could be quite interesting. But it looks like we're going to be heading down towards the lower of the range here on gold. So that's looking all good. Dollar's looking quite strong here. And I mean, I would expect that after that type of jobs data, to be honest. That was a very, very strong number. I wonder if we'll get any comments from that next week. How are we all doing, guys? Did any of us try that news, or did any of us stay out of it? Is the bottom of the range 50% of the overall long-term range on gold? No. If you go to the daily time frame, the overall range on gold is all the way down here. This is just a slight range that I was looking at because of the dollar index, where the dollar index was between the 101s and the 102s. That range there was coinciding quite nicely, or having confluence with this minor range in here. Okay. Yeah. Call 200 pips and counting. Nice. So, Cody, did you predict that the jobs number was going to come in a little bit hotter, or was it? Justin took a short on cable, scalped 20 pips. Nice. S&P for Roberto. I stayed out other than my EuroCAD, which is looking good. Yeah, okay. Let's go take a look at that. I'm interested in that. EuroCAD. Nice. Nice, Denise. Love a double top. Love a double top pattern. Yeah, looking at Wednesday's jobs data. Nice. Yeah, we did actually see a little bit of a move higher, didn't we? ADP non-farm employment change came in at 296. Yeah, so that was kind of the spark, really, wasn't it? There was I did make a comment yesterday, didn't I, about the unemployment rate, actually. Can't remember what that was, what that came in as. Yeah, I can see here. ADP non-farm employment change, 296. Oh, yeah, the unemployment claims came in at 242, didn't they? Which was obviously a little bit of a misleading number. Yeah, good data out of CAD as well, Denise. So that's really going to help support that Euro CAD to the downside. 41,400 jobs created in Canada, above expectations of 21,600. Unemployment rate also fell to 5%. Well, actually remained the same at 5%, I should say. Forecasts were suggesting 5.1% there. So that's going to be quite a interesting move for CAD. Starting to see that nice little move to the downside now. Let's have a little look at what oil's doing. Let's go to our oil. See if it's rebounded from that gap area. Yeah, so we closed the gap. I was looking for that move to potentially close. Again, kind of coming back down into those swing lows, isn't it? Seeing a little rebound down at this supporting zone. Nice little range that oil is in at the moment. So nice little rebound coupled with some good data out of Canada could spark a little bit more downside in that Euro CAD play, but a lovely double top pattern there. You know, if you'd like to, sometimes you can measure the double top to 240, was that? 222 pips. Brings you back down towards these kind of lows down through here. Potentially there. Nice move. Yeah, cool. Dollar yen to 137. Let's go take a look at dollar yen. Let's bring dollar yen in as well. Nice move higher here on dollar yen. Yeah, dollar yen's an interesting market, isn't it? If we take a look at it from this kind of weekly point of view, we've got sort of a really nice area down through here. Okay, so this was around about the 127.50s. Also got this kind of area up through here as well, which was the 137s. I think I recently did some analysis on this, talking about the 137.50, I think it was, or even the 138s. And then obviously we've got this area up here, which is like the 151.50. Tag these up in a minute, guys, so that you can see that a little bit more detail. Here we go. 151.50. Hopefully you can see that on the stream. 137.50 and as well, key area on dollar yen. And then these lows are key down through here at the 127.50 as well. So from a weekly perspective, we've got some nice areas of interest on dollar yen. I'd argue in here as well. I always like to mark up the lows and the highs, just because we know we can see physically that prices turned in and around those points. Okay, let's just put in a price label there. Yeah, look at that. 137.50. I would really like to see price trade above that area, to be honest. I think if we could trade above 137.50, it would open the door up to a little bit of a move higher. Especially if we kind of look at it from this daily chart point of view. We had a really nice sort of consolidating sort of channel working through here. You know, if we kind of clone that down, we had a nice little sort of bearish channel that price was working with. We traded outside the channel, price rallied. This is where we actually spoke about the potential for dollar yen to rally into 137.50. Now that we've had that, a little bit of a pullback, price coming back down towards those demand zones in here, previous lows. So yeah, we could see a move up back up to the 137.50. I think the sort of a nice sort of reward to risk opportunity could form above this 137.50, because you've got this high in here that would be sort of a target. We've got all these lows up here that would be a target as well. So I would be looking at sort of these areas, 145.50 in here. Let me just make that 0. And then obviously we've got this area just through here as well, which is the 142. 142. That's not what I wanted to do. 142. There we go. So around about the 142, I think you're going to have a nice reward to risk ratio. If price can break through that 137 spot 50 area, we've got what 142 handle, maybe even the 142.25 at a push, 145.50, 150.50. That's obviously if everything was to turn around. I still think dollar fundamentally could be a little bit under pressure, but obviously with this latest jobs data, you know, the Fed aren't going to be very happy with that. So we may start to see the market start to price in another hike from the Federal Reserve. That may start to just give us a little bit of a dollar boost through this month. So it'd be interesting to see. Yeah, I think if we were to go down to a lower time frame, you know, you can see that we've got that nice change in trend pattern. We've got these highs in here now. You know, maybe price wants to sort of pull back down towards 134.30s. That could be a good supporting zone for price with a move up to the 137 spot 50 handle. So yeah, that's going to be an interesting one to watch. Let's go back and see how gold's performing. Nice little move down there. Dollar index, nice little push up. Still, euro dollar coming down, heading down. S&P 500 seems to be a little bit rebound here. Starting to see a little bit of a pull up there after the price came into these swing lows. So that's going to be quite an interesting one to watch. But yeah, right, guys. That was a nice little reaction there. Yeah, possibly, Denise. That could be the next thing on the cards, isn't it? If we do start to see sort of our CPI start to come in a little bit higher as well, yeah, definitely a potential for the Fed to have to act again. You know, the Fed are really, really hot on inflation, and I think they're worried about it still. And that's, you can see that by the fact that they haven't paused rates. They're talking about pausing rates, but because they haven't yet, they've still got the opportunity to try and get on top of it. So, yeah, I think it's going to be an interesting watch going into next week, especially with that CPI data. So, thanks for joining me, guys. I'm going to leave it there. If you do have any comments or questions, please leave them on the stream after. If you do like this type of video or stream as well, you know, happy to do more of these as well. But leave a like on the stream. That will let me know that you want to see more. If you're not subscribed, please subscribe to the YouTube channel. Really, really helps. And if you are subscribed and you're joining me and you're a regular, thank you for joining me again. I really do appreciate your time coming out and watching these. So, yeah, let's see what happens. Let's see if the dollar can have a little bit of a move higher going through the month of May. All right, guys, I'm going to leave it there. Again, thank you for joining me. And I will speak to you very, very soon. Cheers.